Welcome to your Essential Business Briefing. I'm Stephen Carroll.
And I'm Kate Moody.
This week, we're returning to some of the biggest stories we covered in 2019 and seeing what's changed. Coming up.
The streaming wars hit new heights as big players entered the game. So what could be next for your binge viewing habit?
A new international plan for taxing tech giants, but is there any sign that it will work?
America's yield curve turns upside down again. Does it really matter, and why?
And after many, many warnings about a slowdown, we look for reasons to be cheerful about the global economy in 2020. OK, 4 story updates in 12 minutes. Kate, let's get going. First of all, a big splash in streaming. The market's been really inundated with new big names from entertainment and news. They're all trying to get a piece of this pie.
Yeah, absolutely. Apple and Disney jumped into the fray in November to compete with market leader Netflix and Amazon Prime. Now, they're all spending billions of dollars on both original programming and a vast catalog of TV shows and movies. Netflix remains the market leader for now. It's got 158 million global subscribers, but 10 million people signed up for Disney Plus on its very first day, and there are estimates that that could double in the next couple of months. For now, the new competitors are focusing on American viewers, but they'll start going global in the coming months. And there's really no time to switch off because more and more choices are in the wings. Warner Media's HBO Max and NBC Universal's Peacock are coming to home theaters near you sometime soon.
Plenty of names to watch there as well. This is the big question, though, now. How much will be too much when it comes to streaming? Are we going to get to peak binge watching?
Well, it's really hard to know how these new players are going to disrupt the current level, how they're going to change viewing habits. Will people cancel their subscriptions, or will they just add on new options? Now, already 74% of American households pay for at least one video streaming platform. That's an increase of around 20% over just 4 years. 2/3 of those households say they have more than one streaming platform. But the trend that could prove a little bit inconvenient for providers is sharing. A study by Country Financial said that 3 out of 4 Americans allow friends or family to log into their own video
Not just
accounts.
Americans. Yeah.
Well, the numbers are about Americans, but I think it is a generous trend that goes around the world. And of course, many of them aren't asking their friends and family to share the cost.
Well, that's, of course, going to be the big question, is how much are people going to be willing to spend on this when they have all these options?
Yeah, well, the streaming market itself is expected to be worth nearly $690 billion in the next 5 years. But consumer spending on both traditional TV and streaming platforms is projected to grow by only 1% over that same period. Now, people are likely to shift more towards streaming and away from traditional cable or satellite packages, but their overall budget will stay fairly flat.
OK, that's story number 1. One of the stories that we came back to a few times this year was the challenge of how to tax digital giants.
Yeah, and we're talking about companies like Google and Facebook. 2019 was the year that some progress was made on this really thorny international issue.
Yeah, there was a general acknowledgement out there that the current system for corporate taxation wasn't working and that it needed to be changed, particularly when it came to digital companies. But there were very few countries out there willing to act on their own about this. So this year we finally got an international plan drawn up by the Organisation for Economic Cooperation and Development, or the OECD. It outlines a way to reallocate profits and thus tax from countries where tech firms might do a lot of business but not necessarily have a very big physical presence, which is one of the things that tax is currently linked to. Now, this plan was drawn up in October of this year, and we spoke to Pascal Saint-Amand from the OECD, who's the man in charge of drawing it up.
Today, Google will pay its taxes in the US, because it's an American company, and will pay hardly anything outside the US, in spite of doing massive business in many jurisdictions. Our plan is to make sure that Google would pay in the US, but also in the markets where they do business, in France, in the UK, but also in Australia, in Senegal, or in many other countries. So that's the goal.
So, Stephen, where does this plan stand now?
Well, the G20 finance ministers agreed to support it at a meeting in October. Negotiations are ongoing among OECD members about this, but there's already been some early resistance from the United States. The Treasury Secretary, Stephen Mnuchin, wrote to the head of the OECD saying that there were concerns over the plan and instead suggested a completely different approach. That caught the OECD, unsurprisingly, by surprise. And the head of the OECD, Angel Gurria, has now invited Stephen Mnuchin to Paris to talk about this issue and to try and work out some of the differences of opinion over it. Realistically, any new global plan won't work without the United States, so those talks will be really, really interesting to watch.
In the meantime, though, of course, France has tried to come up with its own solution to this taxing problem.
And it's a 3% tax on digital sales from big companies. That became law in France this summer. France went ahead with this by itself because it couldn't get agreement at a European-wide level. This is something that I discussed with Bruno Le Maire, the French finance minister, when I interviewed him in January of this year. He told me he thought he could change their minds. It turns out that he couldn't, so France went ahead and did it by itself. This tax really did upset Donald Trump, though, and we saw quite a lot of criticism on Twitter, for example. Donald Trump asked the US Trade Representative Robert Lighthizer to investigate the tax. The investigation found that it did discriminate against American companies. As a result, Washington has threatened tariffs on French products like wine and cheese that are imported into the United States. They're currently consulting on those tariffs. Nothing's been imposed just yet, but another hot topic to watch in the new year.
All right, well, story number 3 now, because this was also the year that I learned all about the yield curve.
One little graph, a whole lot of trouble. Give us a quick refresher, Kate. What is the yield curve?
Well, Stephen, a yield curve tracks the amount of interest that investors can expect to earn on government bonds. Now, it tends to move in an upwards trajectory, so you get a higher rate of return on longer-term investments because of that added risk and uncertainty in waiting. Now, here's a little example. This chart shows in green about a year ago that the return on a 2-year bond was about 2.48%, and it then crept up to 2.7% on a 10-year bond. Fast forward to December 2019, and in blue you can see those rates are nearly 1% lower, but they're still moving upwards.
So that upward movement is what's important there. So what happened when the curve inverted?
When it turns upside down, literally. So in August, it became briefly more attractive to invest in short-term rather than long-term bonds. Now, it's the black line that we can see bucking the trend and slanting downwards on our graph here. And it really set off alarm bells about a possible recession because over the past 5 decades, an inversion for more than 3 months has been followed by an economic slump. It's really all about the direction of these lines.
So what happened then that we saw the line go back to the way it's supposed to be?
Well, it didn't stay inverted for very long because it flipped back up by December there. It's also not 100% reliable as a predictor of recession, but in part because there's this renewed awareness about the importance of the yield curve. We did see policymakers taking action to try to stave off a downturn. The Federal Reserve lowered interest rates 3 times in 2019. Now, at the central bank's last meeting of the year, Fed Chairman Jerome Powell said that he had been keeping an eye on the yield curve, one of many factors, including manufacturing and trade tensions.
We do believe that monetary policy operates with long and variable lags, and that it'll take some time before the full effects of those actions are seen in the economy. So that'll take some time. If you look at more broadly at the Treasury yield curve, it has moved more than 75 basis points. So you've had quite a significant move in the direction of higher accommodation.
All right, and speaking of central bankers, Stephen, Christine Lagarde took over the helm of the European Central Bank this year. She said she would be neither a dove nor a hawk, but she'd try to be an owl with a little bit of wisdom. So we'll be keeping a close eye on her leadership style over the coming year.
We certainly will. Well, the yield curve wasn't the only alarm bell ringing about the global economy this year.
Absolutely. There were plenty of warnings about slowdowns to go around.
I think every major economic forecast I read this year was just grim. Every time, certainly in the last few months.
Gloomy across the board.
The International Monetary Fund and the OECD both revising down their growth forecast towards the end of the year. The OECD saying that world economic growth should be about 2.9% this year. That'll be the lowest rate since the financial crisis in 2008, and that it's going to remain largely around that level for the next 2 years. The US-China trade dispute has been blamed for a lot of the worries about the global economy, particularly because investment slowed down, and investment is what tends to lay the groundwork for future growth in the economy. In Europe, the European Central Bank recently downgraded its growth forecast for next year to just 1.1%.
All right, but there were a couple of bright spots, weren't there?
Well, there were a couple of countries that we were warned on several occasions that they might go into recession, and they didn't. Now, recession is 2 consecutive quarters of negative growth. In the middle of this year, Germany and the UK both got very close to that, but in the end didn't actually fall over the cliff into recession. In the UK, the economy has been yo-yoing throughout the year around the various Brexit deadlines. People were spending more and stockpiling before a deadline and then not spending so much after the deadline, which is of course having some impact on the wider economy as well. A boost to services and construction, though, were what saved the UK from a recession in the third quarter of this year. Germany became even closer to it. They registered just 0.1% growth, the lowest amount possible between June and September to dodge that recession. As a major exporter, it was really trade tensions that had hit German industry. But 0.1% growth is, as close to zero as you can get. So neither country are really out of the woods yet.
All right, well, let's try to wrap this up on a more positive note. Are there reasons to be optimistic about the global economy in 2020?
Yes, and one of them is actually trade. This phase one interim agreement between the United States and China that seems to have called a halt to their trade war, that's going to remove some uncertainty for businesses, but there's no guarantee that won't flare up again in 2020 as well, we should say. There are also hints of trade trouble between the United States and the European Union. That's something else to watch. But if you're looking at economic surveys out there, there's some good news, for example, in the US manufacturing industry, things looking positive there in the recent surveys. Economic forecasting, though, is a bit like the weather, so you do have to be careful, and there'll be plenty to watch and plenty of uncertainty out there for us to keep an eye on next year.
And either way, plenty for you and me to talk about throughout 2020.
Yes, there will be, and if you'd like to watch any of our business coverage from 2019, you'll find it on our website, on our Facebook page, France 24 Business, and you'll find Kate and I on Twitter as well. Until next time, thanks for watching.